Yeah, so good to talk with everybody here. Let me maximize the video here. Cool. But yeah, great to chat and talk further. So I'm Will Cordes, my company KPISense. We are a strategic finance business as a service. So basically, we help companies with financial modeling, KPI dashboards, and then we pair that with SaaS expertise. So kind of an all-in-one solution. We're building a pretty interesting platform and are hoping to become a one-stop shop to analyze and look at your historical financial data and then build out a lot of the things that you're doing on the forecast side. So the topic today, how to survive and thrive in 2020 using KPIs and metrics. So with our name, you had to know that we were going to throw some KPI stuff in here. And on top of that, I think 2020, as I think we're all aware, and one of the reasons we're doing this conference remotely, it's definitely interesting times and something that there's a lot of things to kind of think about as we continue to move forward here. So 1 second here. There we go. So to keep it short and succinct, I normally would love to dive into each of these shared definitions. So one of our kind of thesis elements, as a business, is to try to make finance easier to understand and digest for everybody, regardless of your role. So you don't need to be a metrics guru or a CPA or a finance expert to get value out of these metrics, and they're going to help you stay alive, improve your business, and ideally perform better over time. So metrics and some of the tips that we're going to be sharing information on today. On the operational side, one of the things that we focus on, especially now, is cash burn and days sales outstanding. On the recurring revenue side, everybody's familiar with monthly recurring revenue and annual recurring revenue, and then net revenue churn and gross revenue churn. So again, we'll spend a little bit of time talking through some of those elements. And then on the sales and marketing side, everybody's familiar with customer acquisition cost and lifetime value, and then CAC to LTV and magic numbers. So again, we're not trying to dive into all of these metrics and clearly define all of them. I think again, I imagine a lot of the crowd here, given the audience, has some familiarity with some of these topics. For us, we want to spend time talking through maybe how to think about that now, in this climate, and how we can kind of take this data, this information, and use it to drive better performance and make better decisions over time. So, and again, feel free to check out our website. We've got a big data dictionary. We spent a ton of time gathering all of the terms, information that we could find, and trying to bring kind of sane and a sane kind of steady flow of information to share that with folks, again, to try and drive better understanding of the space and how to think about certain KPIs and metrics and terms that pop up in term sheets, M&A processes, etc. So with that, let's hop over here to the operational metric side. So cash burn rate, basically, how much money are you spending? How much cash is going out the door on a monthly basis, on average? So a couple of things here, tips that we're looking at right now and working with our customers. So we've got about 35 customers we work with today, and these are all kind of top of mind as we continue to work with them and try to kind of optimize performance and ideally kind of avoid items that are going to cause issues down the road. But on the burn rate side, one thing that we're pretty focused on is looking at potential mitigants, ways to reduce spend. It really depends on your business, right? There's a lot of business that have faced headwinds from the COVID crisis. We're seeing some that have received some tailwinds and have actually grown even more aggressively. But one thing that we're looking at is trying to be opportunistic. So if you face some of those headwinds, looking at where some of your spend areas are and identifying if there's ways to kind of reduce some of that friction or some of that cost in areas where you're maybe not getting as much value, definitely something we would recommend looking at. And then alternatively, if your business is accelerated, you're sitting on a good cash position, this is a great time to reach out to potential partners, vendors, etc. There's a lot of folks out there that are cash strapped, that are ideally not in the best place, especially landlords, real estate businesses, etc. So if you're sitting on a good cash position, or if your business has accelerated, one thing that you can do is reach out and potentially negotiate prepayments. So paying up front some of these expenses that you have later this year, and potentially while also helping them from a cash flow perspective, drive your expense burden down 10, 20, maybe even 30%. So regardless of if you're the CFO or you're involved in the business, there's a number of ways that you can try and attack this. The second item is days sales outstanding. So basically what this metric is measuring is how quickly are you getting paid on your invoices. So as you're thinking about forecasting, financial modeling, and planning, one thing that we would recommend is assume that you're going to get paid slower than you were getting paid pre-crisis. This is just one thing that helps you avoid assuming you've got more runway than you do. And we're always going to err to the side of caution on this front with all of our customers and anybody we talk with on the subject. So with that, I'm going to hop to the next slide on the recurring revenue metric side. So, one thing, and again, I'm sure everybody's seen the content. It's all over the place. Basically expansion and kind of, customer success is the new business right now for a lot of businesses. So how can you expand and grow your existing client base? If you are seeing a reduction in number of new bookings and kind of your new sales process, some of that work has stagnated a bit over the last few months. One thing that we're thinking about is trying to grow and deliver oversized value or outsized value to your existing customer base. Same from a new booking standpoint. Again, trying to think about that and plan accordingly on the new booking side is important as you think about, what does my cash burn look like, or how do we see the business growing moving forward? Being reactive is fine. You just want to make sure that you're kind of thinking about this dynamically and you're constantly kind of relooking at new data that's flowing in. And then lastly, one thing that we recommend for everybody is customer segmentation analysis. So looking at different parts of your customer base, what do those recurring revenue trends look like across different segments? And what do they look like for certain parts of the customer base? There's potentially areas or items of value that you can identify there, and ideally take that information to better allocate marketing dollars or sales and marketing resources. And then lastly, on kind of the sales and marketing metric side, one thing that we're looking at is really focused on customer acquisition costs. So won't dive into customer lifetime value too much, but really identify and focus on cost-efficient acquisition channels, right? So if you're spending a lot of money on marketing on channels that take a long time to materialize, or they are longer than your months to recover CAC, you want to look at those two items in kind of unison and in parallel, and identify where there's opportunities there, right? So focus on the higher value, paid acquisition channels. Even if you lose some efficiency there, you're still likely gonna perform better from a cash efficiency standpoint. And the other reason why is, again, you don't want to burn money on marketing that isn't going to kind of deliver strong ROI in this type of climate. So it may sound self-explanatory, but you'd be surprised how many times we see spend continuing to ramp up or ratchet up, even when follow through, or I guess middle and bottom of the funnel metrics start to kind of tail off a bit over the last 3 months. So high level, if this is a dashboard, again, this is really high level example. Just want to kind of share this. This is again, the work that we do on our side. We tend to get a lot more of a deep dive on this type of stuff, but wanted to show how we're talking about some of these metrics. So for example, gross revenue churn versus net revenue churn. One thing that we would look at here is trying to identify, hey, how much opportunity do we have in expansionary, from expansionary revenue growth within our existing customer base, and where can we drive value there? So trying to use this to map against kind of your CSM team and what the customer success function is on is important. Same here, right? If you're going to map this out and project out what you're doing from a days sales outstanding standpoint, looking to see where accounts receivable are trending or what big deals are coming up, really helpful as you think about cash burn and your cash flow for the rest of the year. And then finally, again, on the cash side, I think being conservative and thinking through some of these more important elements are really important in kind of this time. But with that being said, that's it from my end. Well, I'm Will, we're KPISense, and happy to answer any other questions. I know I've only got about a minute here, but appreciate the time.